What is good, everyone? So today I took two trades, one break-even trade, and then just one winner, I guess. No reason to really do more than that, because I honestly feel like if you start to take more than like I don't know 5 to 10 trades, you're gonna start over trading, honestly. And I've been there, done that before. I even still to this day sometimes do that. Um, but I've gotten a little better at it, controlling it, and you should too. Trading is just a mental game, honestly. But sometimes when I do it, it's just more like, all right, I took 4 break-even trades already. Let me see if I can get another one or another like trade opportunity for a winner. Um, but if you're taking like 5 trades and like 4 of them are losses and only one winner, like you just gotta stop trading for the day. But yeah, so I'm just gonna quickly go over the trades that I took today. So let's do this quick review. Let's just hide the chart trader. So very first trade I took was about like 7 minutes after market open. And the reason being is just because we were in a 233 retracement area to the downside. So what I mean by that is if I pull over this 233 range bar chart, market open was pretty much like somewhere around here, market open. So didn't really see any opportunity yet, but then we get this down close candle and we are able to kind of come back into that 50% area that you can see right here. And there was just a potential short opportunity that I saw on the 55R. So also we can see that we are kind of coming underneath this blue line, which is that 233 EMA. So it's also another sign that like, okay, we can keep moving to the downside, and what do you know, we just do and ultimately end up going to the downside. So now if we go to that 55 time frame, it looks a little confusing right here right now, but let me just kind of clean it up a little bit. So at first, didn't want to bring it to the front. Didn't like that. Remove. So at first we kind of come into this zone right here, and I was like, all right, let's see what we can do. So pretty much wait for price to touch 50% level, then we want price to kind of close below this candle low, which we do get. So as soon as we get that, I just kind of put my volume profile out and wait for price to kind of touch this point of control level at 2560. Now we just kind of move over, scroll over a little bit. Let me get rid of this guy. Scroll over, wait for price to kind of touch this 600 level, which is the point of control. Let me just put on all of the charts. So we wait for price to kind of get into that area. Price gets into that area. We have a nice confirmed closure to the downside. Price is coming up to that point of control. We have a break of this order block high because we can see that there is a confirmed order block right here. So it's looking good. It's looking nice. The EMAs, we're kind of underneath the EMAs. The only thing that's maybe a little sus is we're kind of coming up on this VWAP right here. Let me make it a little bigger so we can see it more clearly. We're kind of coming up into this VWAP with the green line right there. But besides that, maybe it's a little sus that we are still above that 233 MA on this time frame. But I would say besides that, everything else is looking okay. As long as we get our confluences on the smaller time frames, then we should kind of be good to go to enter short. So what do I do next? After looking at that 233R, we come into that retracement area. We form a complete order block. We get a close above this high, but then it's telling me like, oh, this is like a liquidity grab, or something of the sorts. We get that new closure to the downside. Just wait. So now we have order block formed. Wait for price to touch this point of control area, which it does there. Now what we do is we look at that 21 EMA. So let me bring it over Actually, let me just do it on this guy. 21 range, but now I just gotta bring it over to where it is. All right, so here, right? Nope, not that one. Here. So this blue line right here, it's pretty much just saying that this is the point of control on that 55R that we drew. So now we just wait for price to kind of touch it, which it does here. Now we wait for an order block, some sort of order block to be formed without breaking that 55 candle high. And that 55 candle high, if I remove this, it's right above here. So we pretty much don't want price to kind of go above this high, which it doesn't. Obviously later on it does, but for this first trade it doesn't. And now that we have this, we kind of wait for price to retrace back into the point of control off of this order block, because it's telling me that, okay, where you touch the point of control of that 55R, let me see if we get the continued movement to the downside on just one time frame below that, or I guess like, you know, the medium time frame, the middle time frame. So once we do get that closure right away, I'm like, okay, where's this point of control? Point of control is right here at 2602.25 or 0.75. So we just draw a nice little line. We can see that price does touch that point of control right here. We don't need that. So price does touch this point of control right there. Can I remove the indicators? Nah, I can hide all of them, but it just takes a little bit more work. So we do get that closure below here. We come into that point of control. Now what do? Last thing I do is I just look on the smallest time frame I use, so the lowest one, which would be the 8 range bar. And now we just kind of got to go back to that area. 8 range bar is fairly quick. Please hold. Okay, so here, this green box is that 21R order block formed. Remember this blue line above the yellow line? It might be a little hard to see. Make it like 5. Okay, so this blue line above the yellow line, that is the 55R point of control. Now the green box again, 21R point of control. And this blue line right here, you can ignore, we can ignore this. So once again, this blue line right here, inside the green box is that point of control of the 21R. So now that we have this, we kind of just wait for a confirmation to the downside. And the kind of confirmation I'm looking for is, first, we touch that point of control of the medium time frame. Second is I want to see a confirmed movement, continued movement to the downside. And what I mean by that is just simply just forming an order block to the downside. So for me, we need a closure below this low, down here, below this green candle low. Once we get that on this candle, we have our first order block shift to the downside. So all we need now is for price to kind of come back up into this zone, to this order block zone, and form one more order block to the downside. Because for me, that's like, it's like second stage distribution. It's gonna keep on going down. So we just kind of wait. We can see that price does touch into this order block now. So as long as the price does not break this order block high up here, I'm still in. So I'm just looking for a shift to the downside here. You can see here, price does close below and forms a new order block. Let me zoom in a little bit. So we do get that closure there. Price does close below. So, you know, theoretically, I can just enter right away. But again, these candles are moving very, very quick. Like for instance, from this candle down here at 587, it starts at 737 with 29 seconds. And then right where is it? Right here, pretty much at this high, it still says it's at 7:37:29 seconds. So it's moving very, very fast. So like these 5 to 7 candles moved within 1 second. So it's moving very, very quick. So you're not always going to get the best entry if price is being very volatile. If you do want the best entries, you know, you can just kind of shift your time frames to higher time frames, but doing that will cause less trades to be presentable. But you know, it's up to you. So now we have that second order block confirmation to the downside. So I could just enter, but then again, like everything was kind of happening very quickly, and I was like, I guess I didn't really see too much. But also, you know, it's best to kind of wait for price to come back into the second order block and see some sort of rejection. So we get that rejection, and I do enter right here, get my entry at 90, and you can see that we do kind of come up here. Originally my stop loss is above this high, but since price was moving very, very quick, my stop was, you know, just above this high. So it was about what, a 13-point stop, which is a little bit less than a 1-to-1, which is, it's okay. But something to also note is that if there's an order block that's this large on the smaller time frame, it's definitely best to kind of just wait for price to touch that point of control, which it does actually. Okay, so we're fine. So we do break above that high, then price does continue to downside. And once I kind of see price making new order blocks to the downside, like especially down here, I bring my stop loss to break even. I'm not even risking it. And I was about 5 or so points in profit before I got stopped out, which is good because then price does ultimately keep going to the upside. But I found that with this method, my risk to reward ratio is like about a 1-to-1, or even, you know, better than a 1-to-1 in other cases as well. So yeah, to move on to the next trade. So this was just a break-even trade. Move on to the next trade. It was the same exact concept. So we'd look at that 233 R retracement area, wait for the 55R to kind of get to that 50% level. So it's like in a discount zone. And then, you know, we use that 21 range, and then we go switch down to the 8 range. So if I just pull that up real quick, let me pull that 55 out, and let's see, wasn't here. So we get that retracement into that 50% level on a 233R. And then I see that in order to form an order block, we have to kind of close below this low, which we kind of do, but pretty far out. And I was using, oops, it doesn't like when I put like bring to front or something. Remove. I was using this tiny high and this tiny low as my order block. So this zone right here, you can see that just from that tiny low to that tiny high, that's kind of occurring inside this zone that's at a 50% area, or like a discount zone on the 233. So now we're just gonna put this as the 55R. And now that we have a confirmed order block to the downside, we kind of just do the same thing, have that point of control, which is right here, drawn out. Let's put this on all charts, and let's make it a little bit bigger so it's easier to see. So point of control, wait for that point of control to be touched on that 21R. Now, if we go to that 21R chart, so 21R chart, we can see that we do just touch that point of control area right here, which is from the 55R. Now, same thing what we've been looking for. Wait for 21R to kind of make that confirmation to the downside, so it can form a nice order block. And we do get that right down here. So I just draw a little box, same thing, volume profile, wait for price to pretty much get to this area right there. Oops, not template. I just want to make it a little bit bigger. So wait for price to touch this point of control on that 21R. Wait for price to get there. Price does get there, and as soon as price gets there, I switch to the smallest time frame I use, which is the 8 in this correlation. Don't mind all of this. Remember, the 8 is very small. Okay, so I think we're here. Yeah. So we're at that at the 21R point of control area now. Now all what we're looking for is, again, an order block to the downside. So we kind of get that, not here. We break this candle high, as you can see. Price does keep going higher. I would say we kind of get that kind of like here, but these are equal highs right here. These two candles are equal highs. Yeah, I guess it's also a little hard to see the wicks, but equal highs, you can see that one order block is formed right there, and then another order block is formed pretty much down here. So what I would like to see is once price kind of gets down here, we get that nice order block, just price to come back up into this area, into this zone, and form some sort of another order block to the downside. We can see that once price does come back into here, we do get a close call right here to being a second order block formed, but price does end up pushing back up to these equal highs up here. But price did not break the equal highs. It did not go one tick lower. It was the exact same tick. So to me, that's still valid. And pretty much once I kind of see price being able to close below here, which it does right here on this candle, I kind of take my entry. But you can see that my entry is fairly low. I entered at 1275, and 1275 is right about here. So I entered at this area, which is definitely a lot lower. It's about 3 points lower than when the candle closed below that point of control, or closed below that second order block, excuse me. But the reason being, again, this is all happening very, very quick. Like each candle is like a second long. And a lot of times these candles can be like, there can be like 5 to 10 candles within a second easily. So it just depends on the volatility, but I am able to enter. My stop loss is just above this second order block high, which is about a 10-point stop loss. And all I'm really aiming for is about 10 points. So this was a 1-to-1 risk reward ratio. And pretty much, just wait for price to kind of keep going down. And as I do see like new order blocks being formed to the downside, what you can do is just bring your stop loss from up here to right above this order block high. Then, price keeps on forming to the downside. Now my stop loss is at pretty much break even, just above this candle high. Once I see this completed order block, and the price just keeps going down, 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 and luckily I am able to get filled out right there for a nice little win. This was about 802, and that's pretty much all the only entries I took. So those two trades, it's the same thing that I just look for. It works out well. It's just following the market trend, kind of. Wait for a retracement into like a discount area, so 50% area on like one of the larger range bars that I like to use, which is like either the 144 range bar or the 233 range bar, or even higher. There's even the 377 range bar that I use occasionally. It's kind of rare, but just wait for price to retrace into that discount area. Then look at, I guess, your main time frame, which for me in this case was a 55R. Then you want some sort of order block, then price to kind of retrace back into that point of control, switch to the middle time frame, and make sure that price is going that direction by price creating another sort of order block on the middle time frame. So for me, that's the 21R. And then again, you want a confirmed order block, draw out that point of control, wait for price to reach that point of control area, then switch to your lowest time frame. And for me, that's the 8 range. So once we kind of switch to that lowest time frame, you want 2 order blocks, 2 confirmed order blocks. Then your stop can easily be above that high of the first order block or the second order block. It's really up to you. And just aim for, like, you know, base hit points. So it's just like, you can aim for 5 points, aim for 10 points, but don't be switching up your profit target. Or, you know, you could switch up your profit targets if you're feeling a little ballsy, and, you know, aim for like the 50% area, like, extension of the 144R or the 233R, and your risk to reward ratio would be like a 1 to 10 easily, or something crazy like that. But yeah, so these are just the 2 trades I took for today. That's pretty much my trading method, my strat, and everything that I'm giving you for free 99. You're so lucky. But yeah, so that's it. You know, just stay true to yourself and just be confident. Peace.